So, hello, I will try to make a solution for the assignment 4, the economic part of this Wurth exam. So, here on the screen we have the exam itself. I consider this like a kind of bonus material, so I will make only an English version, but I might add some words in Excel, some translations into Danish for certain key terms. Okay, this is what you have been through earlier this week. We go down to the English question assignments. The last one is the one on economics, comes here. Yeah. So there's 3 sub-questions. The first one, ratios for profitability, ratio analysis on profitability. The next ones we come to later. So let me just switch to another screen here. Yeah, this was the front. Okay. Well, I can be a little confusing. What did I do here? I just go back to the assignment text here. If you look towards the bottom, you will find interesting information. There are some Wurth group at a glance that gives us some of the key numbers for the group on a worldwide basis. This is not for Scandinavia, this is the total numbers for the group. Comes here, and actually there are some more pages with things like consolidated statement of cash flow, etc. I don't really see what they don't need it in the economic assignment. If this could give some indication for some of the marketing plans, etc., if they have the financial strength to do it, that could be relevant. But specifically for the assignment 4 on economics, I don't find these last pages, well, they're not crucial at least. They're not, you can always say it gives a more complete picture of the company, but it's not really what they're asking about. But this is the ones we will need some of these numbers, and not to make this video too long, I have cheated a little bit and I have put the assignment text and also these numbers into Excel. So let's go back and read the question. Calculate the ratios for profitability of the Wurth group for the last 3 financial years based on yes, and analyze with reference to the case text. Okay, so we have these numbers. We don't only need some of them, but I imported it all. And let me just see here. So the ratios for profitability, that's a good question. What are those ratios? This is basically something you heard about on the first semester of your basic program in ratio analysis. We have been talking about it sometimes here in this semester. Let me just go back here. Whoa, I have something going on another screen. There's a little extract here from your book, page 511. We have return on investment is one of them, and the use of word efficiency here. Actually, the more common word in English would be return on sales, that we have also used in some exercises. And they say productivity. How do they define that? That's sales and total investment. So I would understand this as total assets. So this would actually be the one we called asset turnover ratio. So return on investment, return on sales, and asset turnover ratio would be 3 of the ones here. And there is a 4th one as well that's quite important, and I will mention in a short moment. Let's see here. Profitability ratios. Okay, what did I say? I said ROI. Maybe I just make the short version. And return on sales. Well, maybe I should write it all then. Return on sales. I think they call that profitability. And here asset turnover ratio. And they also call this something else. I will add it. Return on investment. And the 4th one you should have in mind is the one we call return on equity. Equity. Yes. Let me just check that text again. Efficiency, and here they use product. Efficiency was the word. Efficiency and productivity. Efficiency and productivity. Productivity. But I find a little bit strange words to put to it. These are the more normal ones. Okay, and let us just see this in Danish. So if you don't want the Danish comments, you have to shut your ears for a few seconds. Let me see, this would be rentabilitet. That would be rentabilitet. Or key ratios, nøgletal i forbindelse med rentabilitet. And return on investment is afkastningsgrad. Overskudsgrad af aktivernes omsætningshastighed og egenkapitalens forrentning. Forrentning. Would there be more than these? Well, we could talk about the return on debt, for instance, fremmedkapitalens forrentning, but I don't think that's such a crucial one. So we'll just leave it with these four. And what they actually ask you to do is to calculate it for the last 3 years, but now we have data for 5 years in front of our nose. I think we will not just do it for all 5 years. So let's start with the first year here. Return on investment, that is, we need what we normally call a profit before interest. And they have these nice English words here, but they're very common abbreviations, so you should know them. And this would be earning before interest and taxes. This one is earning before interest and taxes, depreciation and amortization. So this is the one we sometimes call operating margin, or in Danish indtjeningsbidrag. And this would be more like the profit before interest. So this is the one we need. Let me just, this one. And compared to basically how much is invested in the business, the total assets, the total balance. Yeah. So, I will just tidy them up a little bit later. Return on sales. So that's the same profit term we use, divided by sales. How big a percentage of sales becomes profit before interest and taxes? Asset turnover ratio. How big is sales or revenue or turnover, what you choose to call it, compared to the total assets? And let me just see here. Yes, so we need here we need some kind of profit criteria where the interest has been taken out. Do we have something like that? Net income of the year we could use. This is probably after taxes. This is pre-tax operating result. If you want to make, I don't want to make this video too long, but if you want to check it very carefully, you should check that this is exactly the profit before tax, but I will assume that's the case. So we take pre-tax operating result and divide that by the equity. So now we have some nice numbers here. We should be able in Excel to expand our formulas to the next years. And most of them goes in percent here. I will put 1 decimal. There's one exception. This one is not a percent. So also, if you go back to your when you studied key ratios on profitability, you will remember some talking about should we use average numbers from the year or should we use year-end numbers. And here I've taken the more simple way and just used year-end numbers. But of course, as you have data for 5 years, but they only ask you for calculation for the last 3, you can also make it with the average figures. So you would take average asset for the last year, for instance, and use that in your calculation where that's relevant. Anyway, I think I will just leave it like this. They only asked for 3 years, so this is not part of the solution as such. And if we should stick very straight to their words, this is not really so much a part of it either. So I will make this gray. Now nobody can see it. So what they really want you to focus on is these numbers. Return on investment has been stable at this level. Is that a good level? Well, we always compare to a market interest rate. And, well, that's probably not very fancy, because if we compare to bonds, it will be less than this. If we compare to shares in the long run, it will be more than that. But maybe not in these crisis years. So maybe this is decent after all, and it's quite stable. This is also quite stable. Asset turnover ratio goes up a little bit, which is basically good. And also this one we can compare to a market interest rate, and it's actually good. It's also above the long-term market interest for investment in shares, which could be 8%, or for investment in bonds that could be maybe 4 or 5. So this is not so bad. Anyway, you would analyze the develop in the reference to a case text. I will focus here mostly on the calculations, so I will not go into elaborate comments comparing to the projects and this workware, if they have financial strength to do that, etc., etc. So I will just make a short note here. Very stable profitability ratios. However, your comments should be more elaborate. There we are. Okay, there's one thing that's actually surprising here, because this is an exam from the first days of 2016, and why do we work with such old numbers here? We would expect at the beginning of 16 they would have published annual reports up to ending 14, and actually they have. So I hope I don't make this too confusing, because I checked. It's here. Actually, there's something you can Google Wurth annual report on this or that year. If you take the newest one, you actually get a similar table with exactly the same structure, but up to 2014. So I'm a little surprised that older numbers were used here, but anyway, you should still be able to make the calculations independently of that. Okay, so I will go on to the next question here. This has a weight of 5%. So, okay, I go on to the next part. Whoop. Has been copied from the Word or PDF with the exam text. Can I make this a little bit bigger? So, you have been asked to prepare necessary work for decision making regarding work we expected to be sold. Business segment, they have a set of assumption of numbers here. And they say that the contribution to indirect expenses makes 46% of the sales price. Calculate the result on these two segments. So this is more or less a classical thing when you talk about cost system and how to allocate indirect expenses if you do not have a activity-based costing system. So like the situation previously to making ABC. And we have actually, I think we used a supermarket example in class where they assigned the indirect expenses with a certain percentage of sales as well. But we see here Wurth, they have 46%. The indirect expenses should be almost half of it compared to the sales price. Okay, so we have to make some calculations here, and so let us just see. Maybe if I should not make the video too long, I'll just make a small pause here. Okay, so I have resumed from a little break. I have just basically put the information from up here into readable Excel. So what do we have to do now? We could start by finding the revenue, turnover, or sales as they put in the annual report of Wurth. So that is how many units do they sell, at what price. That's probably not a big surprise. And we could say material cost and labor cost. This is like then it's the total numbers. So I just copy this. Oop. So labor cost not, and that's a similar thing. We could have made this more fancy in Excel, but okay. Sales in units by by material cost of cost. And again, sale in units by labor cost. So what will we have if we deduct the two? We will get a contribution margin. This is basically the two variable costs that we have taken out. So this looks a little bit better. Okay, so we would have this one minus that minus this one. Contribution margin is so much, and we will have the indirect expenses allocated. So indirect expenses. Yeah, we can do this in a different way. We could make a total over here if we want that. Do I need that? No, maybe not. Oh, we'll see. Okay, indirect expenses. Indirect expenses here. Of course, we can do things in different ways. I like to make those percent visible, but anyway, I will maybe choose not to do it here. So we'll just take the 46% of the revenue, sales revenue here. So much. And here we'll have what they call a result. So this is some kind of profit measure result. Profit. But of course it's a profit at a certain level. Maybe they have not taken out all of that general overhead here, or interest, etc. Interest and such cost. Okay, so maybe this is more or less at the EBIT level. Okay, what can we do about this? We would say, okay, so we have the contribution margin minus the allocated indirect cost gives us so much. We can repeat that for the other segment, and I think actually my formulas will survive that. So we get this. We can say, no, not here. Yeah, we need a row here. We need a line here as well. A line here. We don't a row, a line. We need a line in these two places. Boop. That is. We need to make it a little bit more readable. Look, no decimals. I don't know if I need this. Okay, so what were they actually asking us about? Calculate the result before interest of the expected sales. Well, that could be seen as they want a total as well, so let us just make a total. This one plus that one. We can repeat that all the way down here. And we can use format brush if we want to make it look nicer. So, well, actually they don't ask for a comment, but so the result of the profit is 48,000. If I did everything right, I hope I did. And we can see the way it's distributed. But basically here we see that segment B buys 50% more than segment A as volume, and all the numbers here are basically the same. So they buy 50% more, and at the end of the day the result from doing business with them becomes 50% more than from the other segment. That's probably no big surprise. So, but it's the answer to this this question, which counts for 6% of the total assignment. So 6% out of the 20%, that's the economics assignment for. Yeah, you could maybe add some comment to it, but I don't think this is a little bit brief version I make here, so that's not so crucial. Okay, so we go on to the big one here. Whoop. I should do that. Based on the expected sales to two segments, we would find that yes, so this is a classical thing that we need a ABC system because they will not use resources in the same proportion compared to their purchase. So, and they have made some of the things for us here. They have made annual total activity cost driver. Yeah, actually I think it would be more precise to say units. Up here. Setup of machinery, sewing and assembly, packaging, delivery to the customers. Could we make it more? Should we just have a little 1,000 separators? And you would be aware that I use Danish notation all along, so I use the comma for decimal point and the dot for 1,000 separator. So this is not done in the American way. Yes, so they give us this information. Yeah. So what could be our first step? It could be to find what we call the driver rate. If we know how much the total annual cost for set of machinery is so much, and they have so many sets up, so how much does each each setup cost? That would be driver rate. So that is this one divided by that. I can see it will cost us 300 krona, yes. And we can make the same calculation here. Okay, so each time we had to set up machinery cost us 300 krona. 1 hour of sewing time is 100 krona. I don't remember from the assignment text, but this looks like they're producing somewhere outside Denmark, because that would not be the total cost in Denmark. Packaging, each product costs 50 kroner to pack, and the deliveries cost 3,100 each. Can we maybe make this a little bit more beautiful? Could we somehow emphasize that this is things we calculated ourselves? We make it yellow. Okay, and then we have to see how can we best do this. Yeah, I think we'll add some extra columns here and some extra rows up here, so we sort of combine this with the table from the assignment text. So I don't remember exactly how many we need, but we'll find out. And I will also copy this, boop. Oh, yes. Is that a good way to do it? Yeah, let's just see here. So here we must make the assumption, I don't think they actually tell us very clearly, but we might make the assumption that the quantity each customer buys and the sales price and the direct cost is the same as it was in the previous section. We can do this in different ways. So now that I'm going to publish this one, maybe we should do it, well, okay, no, I think I'll start down here. Okay, number of setups. So, and I could maybe, to emphasize this more, I could say this is the total for customer A, and this is the total for customer B. Yes. Okay, because then we could do things here. We could say, okay, how on customer segment A, how much is spent on setups? Well, it is this figure here, and would I want to freeze something? I'll copy it onto the next column in a short while, so I would want to freeze the E. We freeze the E. Multiplied by, they have 10. Yes. That's not so surprising. They have the same number of setups, so the cost for setups are split evenly. So that sounds right. Number of hours. Okay. Let us, basically I think we can just copy, let's try to copy this one down. Up, here we go. And just check this formula. So 100 per hour for showing an assembly, and they spend 800 hours, that'll be 80,000 kroner. And so we have number of products is also 800. Just check. Yeah. So we have this one. Okay, if my formulas are made correctly, I should be able to copy it over here. No, something went wrong. Duck, there we are. Boom, boom, boom. So this is we'll add some extra rows here. Oh. So what could we call this? We could call this the total, this is something like total allocated indirect costs. Cost would be the sum of these, and we can use the same one here. Yes, okay. So, should I make a total here? Maybe I should. So, this one plus that one. Pull it down. Okay, so now the check we could actually make is to see here the total annual cost. We could actually, it would be a good thing to check our work. This adds up to 368,000 kroner, and that's also what we have divided between the two segments, so that's a kind of quality check to our work. So this was the allocated indirect cost, and then we have to reuse some from the second question, and basically down to the contribution margin we can reuse it from here. So yes, yes. Okay. What way could we do it? We can do this in several ways. Maybe I'll do it in the more nerdy way for nerds. Yeah. Okay, so we go there. We could take the we have 3 or 4 rows here. At least we could use these things here. This text we could use. So I just say Control C and I put them here. Up. Yes. And then should I make the calculations again from the bottom, or should I just refer to the other sheet? I think I'll do it the more lazy way and just refer to the other sheet. So this was revenue for segment A is here. And I think I should actually be able to pull this down and pull it over there as well. Can I copy this? Control C. Whoop. Okay. So I will have another few rows here. So, okay. Maybe I can make like a heading down here. Indirect cost allocated by ABC. Yeah. Boom, 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 and get total allocated indirect cost. So I get here, I will get a result profit thing down here. And what do? I take the contribution margin like I did in the previous question and say minus the total allocated indirect cost. And I can copy that over here. Whoop. Yes. So, first step is to maybe to make this look a little bit better and more clear to see what's going on. Yes, I think I will just get rid of some of these. Okay, and I will get this to look a little bit better as well. And I need my row here, my line here, sorry. My line, maybe I should remove all these altogether. Let me just try that. No borders. Yeah. Okay, I would need a line here as well, I think. So, line, bottom border, yes. Okay. So, using ABC, calculate and evaluate the profitability of each customer segment. Yes, explain the reason for the difference in indirect cost for two segments and give suggestions how to decrease these costs. Okay. We could make the comparison here. We could say maybe we just do it like that. Result profit from assignment for 2, in other words from the old system without ABC. Can we just take the number from over there? Yes, I think we can. Yeah, let's just do that. Result was here. Let's hope it all fits. It does, that's nice. At least we see they get the same total profit. If they didn't, it would be a little bit confusing. Okay, here we are. So if we can make this gray because it's just like a comparison. Oh, I have the gray thing up here. Yes. So what do we have here? What happened actually? We can see that under the ABC system, the customer A segment becomes the one who makes most profit. We make more profit than from B, even though we sold 50% more in segment B. So in the old system, it was 50% more, as I mentioned previously. And here we actually make more money from this segment, and we would have to make some to see why does that happen. The setup is actually they have the same number of setups, and as we have less turnover here, this is quite a, say, heavy burden of setups. Relatively many setups compared to how much they sell to this segment. The number of hours seems to be proportional to how much they sold. You will have seen somewhere else they sold, was it 80 and 800 and 1200 units? That is on the previous page. So that's actually proportional to how much they sell to each segment. So nothing interesting here. And also down here we have the same story, number of products. Well, actually we have the number of products here as well. So half a times more for segment B gives them half a times more cost over here, and that goes for both of these two rows, or these two activities. And down here, the big change comes here because we would expect they would have half a times more deliveries. They do not, they have 3 times more. So actually the many deliveries place some burden on the on this segment B. We can see there's 3 times more the expense for that, and that's actually what makes the difference here. So we could say there's relatively many sets up for these, so this pushes, when you use activity-based costing, this push the cost towards segment A. They have the same amount here, despite that the sales here is smaller, but you have the opposite situation here, far more deliveries for segment B. And if you see at the end of the day, this is a small amount, it doesn't influence very much. This does influence more substantially, and that's actually what means that they have less not so good profitability here as I had before. So that would actually be some of the evaluation, and I think you will only get it verbally here. So maybe I should comment that. What about that? Boom. Boom. Verbal on video. Whoop. So the last section here, explain the reasons for the difference in the indirect cost for the two customer segments and give suggestions. The reason for the difference is, well, I think what we can observe is what I have just said, that they are how they fluctuate. So, suggestion how to decrease it. Well, maybe I should write it here briefly. Segment A have relatively, this is a little bit of the previous answer then. Segment A have relatively many setups compared to purchase volume. Maybe we can do like this. Whoop. Segment B, B has, it has. We better make some proper English. Has relatively many deliveries. Many deliveries. The total effect of this is that the profitability of segment B is lower than before, or you could maybe write it's higher for segment A. Okay, how could we increase it? Give suggestion to decrease the cost. If segment A could be persuaded to make larger orders, we could save some setup costs, and similar with fewer deliveries to segment B customers. So that's a little bit of a short version, but you can make it more elaborate than this. So this is basically what it's all about. Now it's also a 40-minute video, so I better stop before it gets any longer than that. So I hope it was of some use to you, and well, I will just stop it here then. Okay, bye bye.